welcome back from lunch. I know it's very hard to get up and go downstairs, but you know, it's the least we can do. And the lunch was lovely. And I think prior to lunch, it gave us a lot of food for thought that I heard continued across the lunch tables. So people were wondering whether the mandates of central banks are outdated, and we actually need to think about what are the new demands that essentially central banks should fulfill in an economic system. We did discuss central bank independence in general, so it was a very interesting lunch. But now we also have a very exciting program prepared for the afternoon. We will hear from Econans. They are a solution builder for real estate and banking. They will do their presentation in a minute. And then we will actually dig deeper into the real estate topic from a discussion point of view, and also from a very interesting announcement about an event that's happening at the end of the year, for which we are a knowledge partner as a think tank. So now, I would like to introduce two speakers from Econans. They are our new partners, so first year of our collaboration. We were very delighted that they agreed to join us today. So I would like to welcome to the stage Sarah Anwar, please, and Krzysztof Bertman. So Sarah is Head of Sustainability and Governance. She is an international speaker as well. And Krzysztof is a regional manager for the CE countries. So thank you for joining, and buckle up. The floor is yours.
Thank you, Linda. And I just have to take a moment to thank you properly. This is probably one of the best conferences I've ever been to. It really feels, from the knowledge perspective, the people we've met, it's just been wonderful to be here. So thank you to you and your team. So I'll get right into it. A little bit about me. I've spent my career working on the intersection between finance, sustainability, and real estate. I currently work at Econans, and we are a climate fintech out of Sweden. And our main purpose and mission is simple. We partner with banks to help them accelerate the transition of their real estate portfolios. We do this with property-specific data, and we do this with digital tools that the banks offer their customers, their mortgage customers, to help them take decisions and enable them to invest in retrofitting.
Hello, everybody. My name is Chris, or Krzysztof in this region. I represent Econans in this beautiful part of Europe. As many of you, I guess, I work also in a bank. I used to be a sustainability manager in one of the Polish banks, and recently I moved to the fintech, or green tech, as you would like to call it, us.
Yeah, we have the same background, sustainability and banks, so yeah.
So old homes, therefore we would like to devote, let's say, a 15 minutes or 10 minutes of our time today to discuss ideas or issues like renovation, retrofitting of single-family houses or multi-family residences belonging to, I guess, retail customers of your banks. So, Sarah, why are we talking about retrofitting today?
Yeah, and I think it's already been thematic throughout these last days. Buildings are integral to meeting EU's climate targets. We've heard it, 40% of energy use in Europe goes to buildings. If you look at household energy consumption, that's around 26%. So this is a lot. And if we're going to save energy, if we're going to become more energy resilient, which is the buzzword, I promised I would use it, and electrify other carbon-intensive industries, it's very important to work with buildings. And if you look at the buildings, it's measured differently. What is energy inefficient? That's part of the work that's going on in Europe to harmonize. But the majority is energy inefficient. And if you put yourselves into the future in 2050, EU is supposed to be climate neutral, 90% of these buildings will still be standing. So in order to have that climate neutrality, it's basically a mathematical eventuality that we do have to really focus on retrofitting. And if we take the bank perspective for a second, banks have worked over the last decade or so with green mortgages, creating incentives for green properties. But what's now kind of like the added focus is looking at the energy inefficient parts of the portfolio, innovating on financial products, matching energy efficiency to interest rates and so on. So key is that retrofitting is part of what's the plan with the European Green Deal.
Yeah, retrofitting is a part of the Green Deal, but as we know, with Green Deal, there was many things happening before. So what has happened on the regulatory front when it comes to this idea?
Exactly, and we've talked a lot about the new paradigm. But when it comes to buildings, I think it's going to be a lot of continuing as we've done, because we've got the Energy Performance Buildings Directive. We know that on the national level, we're defining what's net zero building. We're setting thresholds for which building must improve their energy efficiency and by how much. So these are sort of regulatory pushes still exist. Even with Omnibus, all the banks, I mean, our bank partners, speaking from their perspective, large banks, real estate is still material to work with. They're focused on implementing and creating action connected to the real estate sector. And this is, of course, same thing with the EBA guidelines. If the European Banking Authority says you have to manage your ESG risk, it's already been sort of calculated and addressed by the bank as important. And I think that with the EBA guidelines, it's important to note that it's not just about having the right data and making the right calculations on the financial risk, but also managing them. And that's the part where we want to be involved. And just to sum up, it's gone from what we see with our bank partners, from ticking boxes and reporting, that's very much still there, but we see a little bit of energy on the action side as well, and especially connected to the energy use and its connection to financial health of banks' customers. So that's a little bit about why it's important on the European level, but we're in CE, Chris, and you're from the CE, you're from Poland.
Yeah.
Can you give us a little bit of the challenges from the CE perspective?
Absolutely. As a CE region, and let's do it a little bit more interactive. We are here in the CE, so if I may ask you, like, who's from Czechia? Could you raise your hands? A lot, okay. Who's from Slovakia? A lot. Who's from Hungary? Guys on the back. Hungary is in the back now.
Now all move to your sections. No,
Yeah.
just kidding.
Romania. Is there anyone from Romania? I know that there were some people from Romania. And last but not least, Poland. Okay, it used to be more of us. I'm Polish as well. Is there anyone from different country but feel any kind of emotional attachment to CE region? Could you share from which countries you are? That's great.
Hungary.
Hungarian corners there, yeah? And could you share? Spain, okay. CE region, based here, okay. And yes, please. Finland, okay. So it's the right audience then. I think, like, is there anybody not raising hand? So no attachment, no nationality, like, I hope it's still gonna be interesting, okay? So, as a CE region, we have 4 things in common. I don't want to enter any politics or stuff, like when it comes to retrofitting or energy efficiency. We have 4 things in common, and please let me use my notes because I want to be very precise. We have very similar levels of individual energy usage, which are the highest in the European Union. All of these countries mentioned now. We also experienced the highest growth of energy prices in the last 5 years. Also this region, the highest. Also, energy expenditures stands for the highest shares of our household expenditures or budgets in this region. And last but not least, the 4th is that we have one of the highest, not the highest, but one of the highest upfront cost of comprehensive retrofit. So I'd like to share with you the perspective of the region, because there are many reasons to say that we have these things in common. And let's use some examples. Let's give some examples. I'll start with Slovakia now, okay? There were many of you Slovaks here. But please, I'm gonna ask some questions you can answer, even if you're not from Slovakia. Do you know how many houses, like how many individual houses are in Slovakia? Anyone? Please, like, be free. Any number. 2 million. Okay, it's 1 million. It's less, so it's 1 million. Do you know how many of them were constructed in 70s or 80s? So we can say that they are quite old. Like, how many percent? Yeah, 65. Yeah, it's slightly less. It's around 50%. But you were right with your guess. Now Hungary. In Hungary, there's 4.5 million houses. But do you know how many of them are heated with natural gas, which the plan is to be fully replaced by the 2050. Do you know how many? Maybe some Hungarians, please? 90, okay. Any other thoughts? 80, yeah, it's 75%. It's 75% of houses in Hungary. Poland now, 2 Poles, I can see, but 1 out of 4 of houses have no insulation at all in Poland, 25%. The rate of renovation is very slow. Do you know how long would it take to decarbonize the sector? I mean, the residential sector in Poland. How many years? Using current ratio, current pace of renovation. What would you say? How many years? 100, yeah, 100. It should be. We have 25, yeah. We have 25 years, according to our national strategy that was released very recently, or will be released, the final version very recently. But maybe we say that we have 25 years, let's say, to decarbonize the whole residential sector. But we may ask the question, like, what does it truly mean? Do you know how much energy we can save by making this process fully in operation? How many energy in gigawatt hours, let's say? I know that this question may be hard, but just please give me any number. Like, what comes to your mind? In gigawatt hours, yeah. 10 gigawatts for Poland. Okay, it's gonna be 170 gigawatt hours. Still, it looks very abstractive, but what makes it more real, this is an amount of energy that is produced and consumed in Poland throughout entire year. So we can we can switch off any power plants in Poland, let's say in 2049, and we're gonna have energy for 2050. This is the amount, yeah? So this is what we can gain. And 2 last countries, Czech Republic. It's estimated that it's gonna be 15 billion euros cumulative investment in single-family renovations. I don't have questions to Czechs because I know that you know more than me about your country, but I can just share that this is a cost of 3 1-gigawatt nuclear reactors that's going to be constructed in Poland. So for the amount of investment that you invest in renovation, we're going to build like 3 nuclear reactors. And Romania, lastly, there are 8 million dwellings in Romania. And do you know what's the house owner ratio? So how many Romanians have house or a flat for their own? Do you have any guess? How many percent? Exactly 95. It's exactly 95. This is the highest in the European Union. But majority, I mean the main group, not more than 55, but the main group was built before 1960. So therefore, these are, I guess, the challenges for CE region. But since we are here at the Sustainable Finance Summit, I think we should ask this question: what's in it for the banks? Like, why banks should care?
By the way, you're all getting quizzed on the data from Chris later. No, just to answer this question, I think the banks already care. I think we've had really good presentations today about quantifying these transitional risks. And if you think about the different departments in the bank, I mean, the risk department cares. You brought out some point of view about the share of energy cost of your total household costs. So, of course, in an environment of high and volatile energy prices, this becomes a case where your default risk can go up for your loans. We have the stranded asset risks, which we've talked at length about, where properties can lose value or become non-compliant with EPPD and other standards. So I think the risk team cares. The sustainability team wants to sort of increase the green asset ratio. They want data from their customers. So I think they want to hit their climate targets, so they care. And I think the business side care. I mean, this is customer-driven. We saw it when energy prices went up in December 2022. People started thinking a lot more about energy. They want guidance. They trust their bank to give it to them in financial terms. And that's a role I think banks want to be in and want to innovate when it comes to the kind of products they offer. So yeah, I think banks care. That's my very optimistic take based on our partnerships.
But Sarah, could you also share with us what is the business case for the banks as well?
And I mean, the business case, and this is something we work more and more with quantifying, but I think what you do is, I presented a bunch of risk, you just flip the coin. If you manage the risk, then it becomes an opportunity. You talked about that massive scale and pace of retrofitting that has to rise, and just financing that is a huge opportunity if it can be done through engaging customers, giving them guidance and the right financial products to sort of finance those renovations. But also I'd like to point out that there's a lot of research across Europe on the impact of retrofitting your home and what that does for the value of your home. Whether it's installing a solar panel or changing out a heating system, this can materially increase the value of your home. And not doing so, of course, decreases that over time. So I think mortgage customers, if you look from that perspective, this is the biggest, our home is the biggest investment most of us will make. So caring about that and caring about guiding customers on that, and then also for the bank as a whole, as the whole real estate portfolio, managing the value increase over time, which of course impacts everything from, emitting covered bonds or whatever, green covered bonds. So I think it's very important, and I think banks are really starting to quantify the business value.
And customers now, like why customers are interested?
Yeah, Chris, I wanted to ask you more on the
yes,
perspective.
Please ask me this question and I'm going to answer it, okay?
Yeah, do it. Answer it.
So no questions now, yeah? Just I'm going to be quicker. The customers are interested. They care about prices. It's up to 20% of their disposable income in the region consumed by energy usage. Customers also expect prices to be higher in the future. And on the other hand, those who did it, 82% of them are satisfied with the result. They find a huge value in the investment, but still too few want to do it. And probably we have to ask the question why. We found two answers, and the service with the two answers, they overestimate the price, and they don't know when it breaks even. So, therefore, Sarah, we need to educate them, we need to show them, but do we have any solution to do that?
Yeah, and that's like where I'm proud that we come in. As I mentioned, Econans, we work all over Europe. We work with banks in the Nordics, in the Baltics, and now in Central and Eastern Europe. And we provide a basically plug-and-pay, white label, digital platform that exists in the bank's own environments, the app, the website. And banks offer this to their customer in order to have a hub for information. So a customer, a homeowner, can answer a flow of questions, which takes on average 6 minutes, and they come to an energy result. And they come to specific renovation suggestions for their home. And these suggestions include what the break-even point would be for that investment, whether it was financed through savings or a loan from the bank. And it also includes how it would impact your monthly costs. And I think what's more important, we've talked a lot about it, it's not that the bank has the solo responsibility on this. You have to connect to subsidy programs. You need to maybe connect to suppliers. And a lot of our bank partners like to have it as a sort of digital hub for energy efficiency. So that's where we come in, and I just want to round off. We don't have a lot of time, but I think banks are in a unique place of trust. I think their customers expect this kind of financial advice. You also have the unique position of having that long-term relationship with the mortgages in your portfolio, and these things take time. So in order for a just transition to happen, in order to connect with the right market incentives at the right time, a platform is a good way forward.
We got this slide, how it works in Poland. We don't have time for it. I work in Poland, so please feel free.
This is how it works.
But I also go to Prague, Budapest, and Bratislava, and Bucharest, and other cities, so...
Yeah.
This is our team.
Yeah, we would love to bring all of them here. This is at our office in Gothenburg. They would for sure love to be having beer in Prague. But yeah, this is our bread and butter. We're all nerds. There's building engineers, there's UX designers, there's sustainability experts. So anybody who wants a demo or want to talk more, we're happy to nerd out with you and show you what we do.
It's 10, 9, 8, and so on. So
that you have exactly 6 seconds to get our contacts. And please do stay in touch.
We try to keep this slide. I don't know, it's up to organizers, but our time is done. So thank you very much for listening to us. And I hope that now it's a little bit clear how it's going in C and what we can do here in the region. Thank you very much.
Thank you. Bye.
Thank you very much, Sarah and Krzysztof. I was actually watching from the outside. I had an urgent call about tonight, but it's all on track. Now, we will proceed with the announcement that I mentioned a little bit earlier. And with that, I would like to invite Gina Ding to the stage. Please come up.
Thank you.
And Gina is from RICS, so is the Association of Chartered Surveyors. Their headquarters are in London, and I remember many years ago, we were given, our institution back then, a keynote at your London event. And I was working with what was called back then a great thought leader, who also didn't believe in business satire. So he arrived in flip-flops, casual trousers, dragging a squealing suitcase. And it was just one of the most embarrassing professional moments. And I was like, why have I accepted a job offer from this person? And then he did the keynote, and it was such a really great keynote that essentially the event was one of the most interesting events I had been to for many, many months. So RICS events, if you haven't been, are incredible. I've been to the one in Venice, in Procuratie Vecchi on St. Mark's Square. And then we visited St. Mark's Cathedral on a private visit. Then we went to Bilbao and had dinner in the Guggenheim. It's incredible, not only because of the venues, but also because of Gina's expertise and the way she hosts them. So anyway, over to you, Gina. ISFC is super lucky to be the knowledge partner for RICS and also participating in this year's event. But I will let Gina introduce RICS' work and also the event in November.
Of course, thank you. Thank you, Linda. Can I have the clicker, please? Yeah, but of course, is to take this opportunity to thank Linda, Julian, the amazing team, and the ISFC for putting together 3 intense days of the CEE Sustainable Finance Summit. There's just so much information to digest and take away and insights from people as well. So, so without further ado, okay. All right, as Linda mentioned, I'm from the RICS, and for those who are not familiar with the organization, we are a professional body, a global institution where we create standards and qualification across valuation, land, real estate, and construction. So we also regulate our members as well, and obviously we do cover the whole supply chain of the built environment. And as we progress in conversation with different actors and stakeholders, we realize that a lot of the issues that we're all tackling together are very similar. So one of the ideas here is to bring the different group of stakeholders together to align the discussion, to align the expectation, and to work together as a collective as part of the decarbonization strategy as well. So Linda has mentioned as well, this is the third edition this year of our RICS Built Environment European Summit. Previously, we've done it across the world, but we have never done it in continental Europe. But Europe is indeed one of the primary leaders in a lot of issues, whether it be it green finance or ESG or any decarbonization kind of strategies discussion. And so Venice was a very interesting experience because Venice, everyone knows Venice. Of course, on the day, and we did not order it, but on the day itself, we had flooding. So we had people like coming to San Marcos Square, wondering how to get into the building. So if you are talking about climate change, what can we do with buildings? And then we had a flood outside. It was, of course, an interesting experience as well, of course, and learning, of course, how cities are trying to overcome some of these challenges through engineering, through urban development, and moving away from, let's say, mass tourism, and how can they become more sustainable. And then we went to Bilbao, and Bilbao was a very interesting city because, I mean, I think we all can learn something from the cities we've been in. And I think urban, if I think about some of the lessons learned as well, I mean, Bilbao is also a very good example for, like, let's say 30 years, how they have transformed from an industrial, how do you say, like a city where it was very polluted, buildings were very black, very dark, and how they become an urban leader trying to build zero emission buildings. And there was a technical tour showing how they are transforming the cityscape and how they are working on the island itself as well. So that was very interesting. So next stop, we move on. We are bringing our European Summit to Budapest, and I think that because we are in a position as RICS, because we have a public interest remit to bring all the different stakeholders together to come and to have a robust discussion. So maybe the best way to show you is this. So we're doing it in partnership with the Hungarian Central Bank, and obviously we will also try to make it an immersive experience as well. There will be a gala dinner at the House of Music, which is an architectural award-winning building by Sue Fujimoto, and a renowned Japanese architect as well. And of course we will try to explore as well the story between music and buildings and heritage, and how we can combine all of this together as well. So obviously very proud to have the ISFC as a knowledge partner, and we hope that together we will see some of you, or even all of you, in Budapest as we explore some of the big issues and that we are currently facing as well. Thank you.
Thank you very much, Gina. And for those who haven't been to events co-hosted or hosted by the Hungarian National Bank, I can very highly recommend them. They're great. And they also have some very interesting sculptures in that center that have a whole story behind them. So now it's my great pleasure to introduce Raul Garcia Rodriguez, coming from Ernst & Young. And without Raul, the summit wouldn't exist. Full stop. So when we had the first great... Yeah. So the real person behind the summit. the point is that when we started the summit in 2022, the first in-person edition, well, we could fund only part of it directly from our core budget, so we needed to fundraise. And fundraising back then was, people didn't know what ESG was. They kept saying ECG, and it was a nightmare. So, of course, fundraising for that was very hard. And then came a visionary, somebody who actually comes from Spain, and was like, yes, this makes sense. There's future in this. And yeah, Raul was one of the people who made it happen. So we're very grateful. But over to you to present on real estate.
Thank you so much. And thank you for keeping it alive and making it so good. As I told you before, and I think it's worth sharing with everybody who has not been here all the previous years, the level is rising amazingly. It's really, really interesting to see all the conversations, to see who's coming, the new faces, and also the new people who are coming from below and pushing us up. I think this is great, and you guys are doing a great job. So congratulations again, and thank you for keeping me out. For keeping me in, sorry. What I'm going to talk about is a little bit of what you have heard the whole 3 days, but a bit more on real estate. I come from developing real estate. I've been 15 years developing what they call specialized real estate, which includes infrastructure, logistics, industrial, retail, some residential, but overall land. So the question is, the focus on from land, why do you transfer from land into sustainability, is a question of your life. You are in a place every moment of your life. If you know how to deal with that place, be it the place where you work, where you produce, where you live, you're going to have a better life. I'm pretty sure everybody in the audience is living somewhere. How many of you own the place that you live? Right. How many of you have created the place, constructed the place, or be involved in the construction? Only few. So you know a little bit more about what I'm going to talk about. And how many of you have constructed for other people? Only one. And me too? Ah, that's not too good. But it's okay. We talk to developers as well. The question is, every moment of your life and all the time that you spend in any place, somebody has thought about how to use it. Somebody has thought about how to use it, and some time ago, hundreds of years ago, they thought about how to use it with the minimal use of resources. The resources were natural resources and time. Now, we have thought from the second industrial revolution that we had enough resources to do whatever we wanted. Hence, we decided to do things in a different way. We started with the economy of resources, and now we're talking about finance of resources. And because there is plenty of money, everybody was using all the money to produce worse real estate, worse places. Not worse in the fact that they are not producing the financial effect that they have to produce it, but worse in the fact that they don't take care of the economy of resources. So, hence, they have become non-efficient. Most of those resources have also become obsolete. So what we are trying to do when we talk about sustainability in real estate is to make sure that the efficiency in the use of resources is back in the game, and moreover, the resources that have already been produced become more resilient. We know that producing new resources is easier because the technologies are there. It might be expensive because there is not enough scale in the production of the technologies, but what we need to make sure is that all these other already produced and constructed units come back to what they need to be. I'm talking about retrofit. And I'm pretty sure that if all of you who own or live in a place had the possibility to change something, most likely you would like to perhaps add a different energy mix for yourselves or a different water management systems. So all these kind of systems need to be there. And this is what we're trying to do. Of course, when you do that, you have to do it through some kind of solution. So in real estate, and probably somebody who works with real estate knows this well, I'm going to come back to these two slides because I want to talk also about sustainability. But what we have to do is to talk, here you go, about how we work with real assets. You have to identify the problem. Once you identify the problem, you transfer the potential solutions or non-solutions to the cash flow. So you have to assess whether this is an efficiency measure or a resilience measure. And then it has to have an impact on how the people are doing with it. How do they look at it, the perception of it. Now, if you don't solve a problem, don't do anything. Don't touch it. You need to find your problem. In real estate, if you don't do it, it's right. If you cannot find the effect that it has in the cash flow, don't do it. And if you do all that, but nobody is feeling it, your pocket or your heart or your kids, then don't do it either. So the three things have to be there. This is important. It's very, very important. So when we talk about the problem, we have to first identify which kind of real estate. In the end, things are very similar, but they're not the same. And I'm putting this slide here because I want to differentiate what we said about housing and the rest. It's not the same place where you live and the same place where you work. And the differentiator in here is actually the movement in between. So this is for me a reminder to tell you that also motion is important. So we're talking a lot about electrifying the infrastructure, about having better infrastructure. You have to have infrastructure between the places where you work and you live and you go to study and you go to the cinema, all that. And this is very important, and we keep on forgetting that. Why? Because we don't pay for it. Wrong, we do pay for it. We pay with our taxes, or we pay with our hours in bad infrastructure, or with an infrastructure that all of a sudden blacks out, like it had just happened in Spain. So this is very important to understand which kind of real estate we're talking about. And then with the problem defined, what we have to find is solutions. So I put up 3 examples of different problems that I'm pretty sure everybody will align to. You have the first one, which is the one that came up to everybody, global warming, climate change, risks that comes out of the global warming. The one thing that we can do and go straight into it is decarbonize. Decarbonisation is an efficiency measure. You decarbonize to use less energy, to use less resources. And there is already a lot of literature and methodologies and things to do, and we have somebody in the room who is going to be talking to us later on who knows a lot about that. But we have already identified a problem, and we know the solution. And I'm going to show you how the solution goes into the cash flow. Another problem will be social inequalities. And again, we can come back to the affordable housing, but we can also come back to the workplaces and how resilient they are. If you work in a farm close to a river in the middle of a flooding season, you're going to be a little bit scared about things. And people are building farms close to rivers that get flooded in the rain season. So still, are we resilient? Are we thinking economically about it? No, we're thinking only financially. Then we have one topic, which is perhaps the main topic for the conference, finance. How do we pay that? How much does that cost me? Where do I get the money to do everything that I have to do? I have identified the problem. I have a solution. How do we finance? How important is sustainable finance? You've heard a lot about it. I'm not going to talk about sustainable finance, but I have to talk about sustainable finance because somebody pays for this. Because the normal finance, the financial finance, is there already. But the financiers, the people providing the capital, are not thinking about it. Well, they are now, but they were not thinking about it. Unless somebody, some of the developers, or you, when you construct your house, or when you buy your house, you're telling, I don't want to buy a unit that does not solve my other problems. And maybe my problem is that I don't want to have so much carbon footprint, or that I don't want to live in a place that is socially wrong for me. So these kind of things is the ethical approach that if we don't have, we're not pushing up the ladder. And we all talk about scope 3, but we don't talk about the social scope 3. And the social scope 3 is what you have to think about when you don't think about your money. But we don't do it enough. This is the ethical approach that we need to have. And then I'm putting here compliance. I work for EY. We work a lot with compliance, and we're really good at it. We know very well what we do, and we know how to drive the people out of the burden of compliance. But in reality, compliance, we have made the problem for them. It should be simplified, and it's becoming simplified. And I like and I hate the omnibus movement because this is going to give us time to do things. And we know that once we do the things, we're going to be able to put it in the reports. So maybe the problem here has been that we first have not formulated the right message about what we do, And trust me, in real estate, nobody wants to spend more than what they have to. Real estate people are very efficient. They look into the cash flow, and they see the outflows, and they say, well, how can we diminish the outflows? Not thinking about how to maximize the inflows. It's a parallel example, and I'm going to talk to you about it with a specific case. But these kind of problems that we have been solving, like the compliance problem, was not really a problem. The problem came from somewhere else. So this is what I wanted to show you. This is a cash flow. This is a cash flow. What do we do in this? You like this, huh? You've seen this many, many times. Whatever we do, I can go to you and I can do for you all the reporting that you want. I can do everything, but if I don't work with this, I'm not solving a problem. And in here, I'm simplifying it, and I will simplify it even more. You have to take care of a few things that are in your value chain. You have to take care of the land, the place itself. You need to understand whether this is a piece of land where I can construct. Is it a risky place to construct? What do we do? Who has the ownership? My ownership is going to drive people out of here. There's a social aspect, there's an environmental aspect, there are many things in the land itself. But when we buy land, we not always look at those things. Then you have to look into construction itself. Enter circular economy. We are there, we produce in a way that is either with some obsolescence inside, or now industrialized to use and reuse materials that we can then use again. This is a cost that is changing already. General and administrative costs, we have to pay taxes, we have to pay licenses, we have to do all things. But if you talk to developers in the Czech Republic, they will tell you the biggest problem they have is this. Because to get all this done, especially licensing, they get years to do it. I have projects for 12 years. 12 years where you have to block a guarantee, wait until they give you the license, and then you start working. 12 years with a guarantee is so much money. And this is a general and administrative cost. Then we have financial cost, sustainable finance. We'll talk about it later. We have this. Then you know what is investment. And then comes back money making. If I do well in the blue line, can I get a little bit better in the orange one? You should. This is what we call the green premiums, right? Well, it's not happening. Sorry to tell you, it's not really happening. We are seeing that a lot of banks, a lot of capital providers, investors are looking into it, but it's a minimum amount of it. If you talk to the bankers, and we have few in the room, how many bankers do we have in the room right now? Only one. 2, 3, okay, we have few, but good. How much factoring of all the efficiency that you have above can you premium in the way that you provide capital? Is there a way of doing it? We know there is ad hoc ways. If I come with a project and I show you my own project, it's quite clear, because I'm more efficient, because I'm not spending this much or that much. But you will probably look more into this part here, how I make the money, than into what I have done up here. We keep on looking into how much money we make more than into how do we make that much money. And we need to start thinking about how do we make that much money, because maybe we made it in a way that is not possible to continue. So we have a disruption in the cash flow, in the income. And this is happening, and now it's evident that it's happening. So some of the elements of the cash flow, as you can see here, do we have the pointer? Yes. You have here the acquisition of land, urbanization, the building the project itself, external connections, all this, I've been talking about it. This is one thing that when we create the strategies, we need to take into account. We need to take into consideration. And there is one thing, and that if I come back to the first slide, you will see, and this is the integration of sustainability. Sustainability has to be integrated into the business plan. The sustainability strategy needs to be aligned, completely aligned with the business strategy. And now I'm going to go back to that first slide, because now it makes all the sense. Look, here, this is a study that we just released at EY on the integration of sustainability. and here, how would you describe the level of integration between your business strategy and your sustainability strategy? Board. We do not have a sustainability strategy. Bad. No, we don't do that. Completely standalone. 82%. So all these things that I said about the blue dots and the green dots are out because the business strategy usually looks into the green ones and consider the other ones as only as the providers of the green ones. So the blue ones are not really strategized. But that's what we need to do. We need to strategize the blue ones. So all your cost, all the outflows of money, which are income of resources, need to be taken into account. So these two things need to be there. Now, this is what we're doing. This is what you are all doing. Otherwise, you will not be here if you were not interested into this. But this is, for me, one of the biggest revelations, because ever since I started working in consulting, I was thinking, okay, everybody here needs to have these two things together. And we found out that they didn't. And now we have the evidence. This is just released in February. So it's very, very new. You can get into the online, or you will see in the LinkedIn. Just have a look at it, and you will see how they talk about integration. But I thought this was very important to see, because you may think, because you're in this room, you're interested, and for you it's natural. But there is so many other people outside of this room that they don't do. And it's a question, I guess, of your ethical approach to show the other people that we can do this. So I'm going to go back to where we were, because I also need to be finishing soon, because we're going to have a really nice panel, and we're going to follow up on this conversation. Any questions so far? Okay, I talked too much.
Where was the study done? Where was the study done? Was it in...
It's EY.
Which region? I mean, is this companies across Europe or?
No, I think it's global.
Global. Oh,
I think
global.
it's global,
Okay,
yeah.
thanks.
So we were here, we were looking into the different parts of the cash flow. Now let me tell you how we work to create the strategies. Yes, feared cash flow where you have to have, as I was saying, all the property rights. You have to have the urban planning. This is how the city is created. You have to construct, and then you have the value, the use, things that come back to you. But then you have to think in all the phases of real estate. When you design, when you construct, when you use, and the end life of the objects. Now, if you do this, you can identify where to act, and then you can create your strategy. Now, this, not many people is doing, but we have to. And you have to. And you have to ask people who can do it for you, because if you don't do it, the problem is that disruption will stay at 80% or 86%, and they're going to still have to have this climate risk. You're going to be, again, looking into your farm work in April, May, thinking, my God, maybe I go there and I cannot even walk the streets there. So this is the problems that we are seeing and that we're trying to solve. And the question here is that when we look into the environmental side of it, into the global warming and how this affects the day-to-day operation, because you can see this in the streets, this is kind of easy already, and we're seeing already enough disasters, and we see how it works like. The problem is when we talk about social inequality, and only because we keep on hearing about affordability, is that we realize that, hey, wait a second, we here, we all have the tie, we have a place where to live. Not everybody does have a place where to live. And the people producing the units are not incentivized to produce units for those who cannot afford. And this is an issue. And this is an issue that we don't think, because we don't think in economic terms. We think in financial terms again. And the problem is, can we think in a more economic way? Well, we don't have to. We have the regulator for that. They should be the ones telling us, okay, how many families do we have that need this? In a very recent conversation that I had with one of the regional heads of housing in Spain, she told me that there are 18,000 families in this region. This is around 1 million inhabitants, something like that. 18,000 families looking for units in Spain because they cannot afford the rent. How many units are produced per year for affordable housing? Not even 500. This is happening now in Spain. It could happen anywhere. I don't know what will be here. We all know how the prices are in the Czech Republic. We know the blockers. We're working with the blockers. Again, if you look into the cash flow, the blockage here comes from the admin, the problem with the licenses. So there is a lot of things that need to happen. It's impossible to talk about all these things in 10 minutes or even 15 that I'm already talking. Okay, thank you. But it's something that, I want you to think about it, because you will be working with either real estate developers or with bankers or with the policymakers or with somebody in the streets that is looking for another apartment or things like that. And we need to take care of these things. We need to consider all that. Finishing almost. Cost of capital. This I'm going to leave for the next session, because we have right now a panel and we can delve into that. We've been hearing already about it. So I think more or less, well, yes, we didn't talk about the perception. Sorry, I almost forgot this. Whatever we do, and my team is listening to me always saying this, and they have heard me all the time. Whatever we do ends up in a form of a report. Be it an email, a conversation, CSRD report, CDP report. We do things to give evidences that we are doing it, to give evidences of how we improve or we don't improve. But there is another perception, which is the market. And the market for real estate is very important, because we have the push from the clients to tell us to do things this way or the other way, or the push from the investors. And then we have investors and we have capital providers that are telling us, okay, so if you show me this, then we can do that. And it should be the other way around. Because we do that, we can show you this. So the one thing, another of the problems that we see in sustainability is that we have started from the end point. We have now Ulrike with us, and she's from the Global Compact. And the Global Compact said that is the 6th point of the cycle of management of sustainability that you should report. You should start by defining your goal. Once you have the goal, you have to do your gap analysis and look into your mirror and do the blood analysis. Then define, because you know where you want to go with the goal and you know where you are, define a strategy. Once you define the strategy, you do the solutions. This is the 4th point. Once you have implemented the solutions, which is what we're talking about here today, is when you can go and get certified out there. And you get certified by getting all these construction certifications, by getting all the reports done, by doing all this, but only if you have implemented this. Because then it comes a compulsory part. You have to do the sustainability reporting. But the problem is that we have focused too much into the reporting and we forgot the other part. So coming back again from the first and the second points, or actually from the first and the third, if you do not strategize because you don't know where you're going, you don't need to know where you are, and you don't know what are the solutions. So what are you reporting on? And I think this is everything I wanted to say before we get into the panel. Thank you.
Thank you very much, Raul. It's a
like this in there.
It's a great snapshot of again, sustainability in practice, and I think that was actually used to be our tagline for the previous summit. Because people, as I mentioned the other day, they always want a case study, show us what's happening. So now we actually see what is happening, and we can also ask questions and grill the speakers, since we have a very good, balanced panel of people who've seen it from different systemic perspectives. And with that, I would actually like to welcome the panelists to the stage. So please come up. We have Jens Hirsch, the Chief Scientific Officer from Building Minds. I have heard fantastic things about Jens. It's been a pleasure to also meet his colleague Peter, so I'm very excited to hear more from Jens. So welcome. We also have Ulrike Germacher. So actually Ulrike and us, we met maybe a year and a half ago or a year ago. Time flies, feels like yesterday. And Ulrike back then was the Chief Sustainability Officer at Erste Group in Vienna. Now she has moved on, and it's been great to actually stay in touch. In a way, the summit becomes like a friendship circle. People who connect, stay in touch, and then they move around, but they still stay in touch. So Ulrike, welcome. And of course, we'd like to also welcome back Gina, who is another person who I think we somehow met at an event and stayed in touch. And now look at us, we're partners. So over to you, Raul.
Thank you very much. These are the guys who are going to answer some of the questions. Can you hear me? No. Should I speak up? Okay, so I think it's better that you guys introduce yourselves into what is the. I've been asking them for a lot of things, but really your curriculums are too much to be said in 2 words by me. You know them better than me, so I'm pretty sure you can explain it better. Jens, let's start.
On the back? No, okay, thank you. So thanks for the introduction, Raul. Thanks for letting us be here. My name is Jens Hirsch. I work for a company called Building Minds, Berlin-based ESG real estate management software company offering end-to-end solution for the real estate sector, so focusing only on real estate, data collection, data cleaning. We can talk a little bit more about that later. Also reporting, supporting. You just mentioned this order of goals, and strategies, and so on. So it reminds me a lot about TCFD, and we have a slide about this later, which also there it's called goals, strategies, management, and finally metrics. And we support with these metrics, getting the right metrics in place, making value out of them, also enabling the customers, large asset managers from the real estate sector in planning. And my background before, which is also relevant here, I was leading a project called CREM, the Carbon Risk Real Estate Monitor, trying to translate the Paris Climate Agreement into something really transparent and actionable for the real estate sector by setting targets until 2050 for each year, each country, in terms of CO2 per square meter. And I've also developed a tool for physical risk assessment in Germany, so covering this whole climate risk assessment.
I couldn't have said it better. Ulrike, please.
Ulrike Gemacher. I have set up, led, and embedded sustainability across different sectors, starting with fast-moving consumer goods for almost 20 years, but also heavy industry, commercial real estate, and most recently banking across different regions, Europe, China, Americas, and also one country in Africa, Nigeria. So while I'm Austrian and my footprint or my home is Austria, I've always worked internationally, and I'm also a board member of the UN Global Compact in Austria. For those who don't know, UN Global Compact is one of the biggest business platforms helping, advising, and coordinating, collaborating with business to embed sustainability. And a lot you have said and touched on really resonated with me, and I think there are some synergies across sectors where we see things that are really working well, where we have probably touched already, the transformation, where recognition is really needs to be seen and said, but at the same time, we are far away from a full-on transformation, and there's still a lot to be done to really get this in the right place by 2050.
Thank you, Rick.
Okay, so obviously my name is Gina. I'm based in Brussels, and earlier I've already sort of explained what RICS is about, and my primary role, of course, is heading the public affairs and stakeholder engagement work across Europe, and relevant to this conversation as well, of course, and we're still running the RICS European Leaders Forum, looking at the impact of ESG and valuation and how we can bring different stakeholders group together to basically tackle the very issue that Raul have just illustrated in his presentation earlier as well.
So there is no coincidence in here. We knew what we wanted. We wanted somebody who knew how to analyze one of the leitmotifs of this conversation, which is decarbonisation. We have somebody who has worked around a variety of industries and is now working with the Global Compact. And I mentioned the Global Compact because it's not also a coincidental reading that you have. It's something that you must look into because these people have really looked into how to manage the different industries and how to improve the industries. And Gina is not emphasizing enough on her work on how to embed sustainability KPIs into valuation, how to move from the blue to the green, from the blue to the orange and the orange to the blue that we have seen. And those things are very, very important because otherwise, if we don't do this, it's very difficult to develop anything. I had in my presentation, I don't know if somebody's out there, one slide that I wanted to warm up with, which Jens gave me, and it's an incredible snapshot of how decarbonization and how stranded assets are calculated. And this is coming from CREM, it's something you created. I don't know if we could get that back to that presentation, my presentation. I will look for that slide, and maybe we can start from there. Hello? That's too late. I should have put it before, perhaps.
Ask for the clicker.
Let me see if we have it here. No, this now, the presentation is not here anymore. No, see. Okay, so we'll start with that. I'm gonna ask a question, and then I'm gonna try to find the presentation again to put it up. So instead of starting from there, I'm gonna start from the last presentation from Gina, because I would like to the audience to understand what has been the work and what is put together so that we have come to the current ESG data list, and what does it mean, what have you seen as an impact into the business already? What is the reaction of the business itself?
Okay, so earlier I mentioned that for those who are not familiar with RICS, one of the things we do, of course, is to create technical and conduct standards. And one of the technical standards here being valuation. So obviously a big chunk of our members come from the valuation pathways, and the conversation has always been, talking to different stakeholders as well. Like as a valuer, you may not necessarily have the right technical knowledge to interpret certain data. How do you, take that into consideration when you're doing your work, and then so on. And then obviously when you talk to investors, they have a different perspective as well. And like everyone wants to know, how do you see the reflection of, CapEx spending on the ESG into the value of the assets. And so the idea came about 2 years ago to bring together all these different groups of people together as part of the European this Leaders Forum. And as Raul has rightly mentioned, so the main primary objective is purely to embed ESG in the valuation process. And it was very important to align the expectation between all these different groups of people. And one of the tangible output, which was published last year, was what we call an industry initiative called the ESG data list, which essentially look at what are the core indicators, ESG indicators that one needs to take into account when you're considering it as part of the valuation process, looking at asset level, only on EU level, of course. And we try to make it as practical as possible in the sense that all the stakeholders need to agree. And we had, of course, about 11 future potential indicators, which are indicators are not necessarily compulsory or necessary at the moment, but we need to be aware of them because they may become compulsory in 5 months, 6 years, 1 year, and regulation is always changing. And then we try to, of course, align them and match each of the core indicators with what is existing in regulation as well, because it's very important that people understand that whatever regulation is requesting, whatever your client or financial institution is requesting, they are not always they are not different things. Everybody's sort of requesting the same thing, but it's important that we are aligned on that. And so that was last year, and obviously since then we've been working with the different stakeholder groups to try to implement it on a very practical level. We started working with the valuation service providers as well. How can we embed that within the processes? And this was before the global valuation standard came out. So the global red book was updated late last year. It became compulsory 31st of January this year, following the International Valuation Standard publication. And of course, one of the very positive impact from the whole discussion of the European Leaders Forum and all the different groups as well is that the new Red Book, of course, has a much more in-depth inclusion of ESG consideration. If you think about VPG 8, that is something that we are trying to encourage the valuation community to really consider. Obviously, this is not a mandatory requirement because it is a global Red Book. We need to take into account that there are geographical and regulatory parameters that can be a limiting factor as well, but it is a step in the right direction. So obviously the demand and the implementation and request needs to come from the client side. They need to be able to how do you say, like use it either as a pilot study within their internal system or embed it within their internal system. And we have had some really positive feedback from some of the investors group. Some of the financial institutions that we've been talking to are also aligned with some of the indicators as well. So, and when they talk about the investor side, we did the alignment mapping exercise with the INREF, which is representing the non-listed real estate side, on an alignment exercise on all the indicators. So, and then obviously this will then have a positive impact on the valuation service providers, because there's more incentive, there's more motivation to try to embed it within the valuation process, whether you are putting it as part of your terms of engagement with your clients, whether you're inputting it into your internal data collection processes as well, and this will help them in the comparables and benchmarking exercise as well.
Mm-hmm. One thing that we have to understand here, and please don't take it as if I was against reporting or the image or the perception of sustainability. It's very important to report. It's very important to report on what we are listening to, is that we have to report, but not only on the financials, but everything that we report on has an impact on the financials. We know that IFRS is now taking more care of the non-financial KPIs, and the Red Book is helping already there. That's why it's so easily taken by the industry, because it gives the same approach to the KPIs as it's needed them for the financial reporting. Now, of course, these two worlds, the non-financial and financial reporting, are getting closer together, because we can see now how the way that we make the business influences the business itself, something called double materiality that we know very well. And these kind of initiatives, at least in the real estate industry, we have the luxury of having people who, like Gina and RICS, or EY for that matter, are getting closer together, the two worlds, the financial and the economic / sustainability world. So one thing that I was very interested in asking now to Ulrike is whether we are really that luxurious in real estate. You've been in other industries, and you know how things are moving. Real estate takes a lot of the value chain from other industries, and you've been in those industries. Where do you think we can move faster? Which other industries do you see that from the ones that you know that are not going at the same pace, or do have an impact or a negative impact, or maybe driving a good impact into the real estate world?
Right. Now, many questions, but I try to be short and build maybe on what we just heard about data and reporting. Yes, reporting is important, but reporting and structure in reporting doesn't equal substance. Yeah, so I'm also glad that actually Omnibus is now revisiting the whole exercise, because market doesn't mind regulation. Market minds confusion, and that is happening now, and that's why we see the momentum stalling. On the data, for me, it's a bit of a chicken and a hen problem. Yeah, having worked in commercial real estate, even though there it's a bit different because it's much more sophisticated in many other asset classes, but still, you gather data in CO2. We saw the challenges that organizations are having on water, but also waste, biodiversity. And we do that. You touched on the valuation, and here's the interesting thing. A lot of people now think this is interesting, starting from tenants and stakeholders and investors and borrowers. But investors and borrowers also need verified data and robust data. And that is basically what we heard before in terms of greenium, and to really drive the transformation, to punish the brown and incentivize the green. And that's not happening because also banks don't have, there's a lot of estimations, as we've heard, banks have to work with. And so, the decisions are very hard to make, and that's a chicken and egg problem for me. On the regulations and the frameworks, I think they are very helpful, because frameworks like TCFD, by the way, mandatory for London-listed organizations, or TNFD, biodiversity, that nature that plays in, they bring the language into the room. Yeah. You mentioned the global EY report. I looked at that, as well as the PwC report, with having looked at the first CSRD reports having come out. And that was quite interesting. Out of the 2,500, I think, companies they looked at, there were only a minority who reported on 8 IROs, and a majority, approximately 120 IROs. Yeah. So I wonder, have the ones with the 8 really cracked the nut and really understood it, or have their minds become foggy when they, because everyone agrees climate change is the problem, right? Who doesn't agree climate change is the problem here in the room? I think everyone agrees, right? So that's a good thing. But then also companies tend to feel it much easier to admit that their own employees might feel stressed. Yeah, so everyone has got, this might be a risk for companies, yeah? But then when we look at water, when we look at biodiversity, when we look at soil sealing, when we look at environmental pollution, things tend to become quite foggy, yeah? And I think what I hear a lot, and with all my respect, because the world is not as simple as we wished out there, actually it's quite complex, but these things kind of tend to support organizations, and by that I don't only mean companies, I also include governments, policymakers, to sit and wait out. And I think the sectors need to be working, together to collaborate, and every sector has a role to play. Digitization, getting the data, and we have to be honest here. How many data have I seen in Excel sheets? Yeah, how many dashboards do we see that have been created by AI? Yeah, so there's a homework to be made from real estate organizations, I would say, to be able to deliver on the verified data, and at the same time, make sure. The banks are being the catalysts as they are, yeah, for having the lever with how they are setting the terms and the conditions, but also to getting the verified data. And then the needle can possibly move at the scale and the speed it should.
That's perfect. And I thank you for bringing up the concept of IROS, impact, risks, and opportunities, because it gives us entry to the slide and to Jens, because one of the main impacts that we see, which is a risk for the industry and is an opportunity for us to tackle, is decarbonization. And into that, CREM plays an incredible role. It has simplified our lives and made it much easier. And I would like you to please explain a little bit to the audience what this is about.
Yeah, let me explain a bit. It's actually, I will start with the big one, which is like the prelude to the right ones, where we have also CREM and stranding risk in the end. So, sorry for adding actually additional KPIs, CREM related, like share of stranded assets over time and stranding year to the set of KPIs. Good to hear that some companies managed to crack it down to 8 KPIs maybe and not need all these thousands. And I'm also glad that you mentioned the cash flow. So that's also what our customers are asking for and how they manage their portfolio, which is just real estate again. And in the title of the panel, you mentioned you had a term like financing real estate redevelopment. Mm-hmm. So that means from the macro level, of course, setting the circumstances, the regulatory framework that allows not only subsidies in the individual retrofits, but also this entire financial framework that allows to steer money into the right things. But of course, in the end, it's about building energy-efficient buildings and improving existing buildings. And where we help our customers is also identifying where this is most effective to do something with the existing portfolio. I was very happy, Gina, when I saw the ESG indicator data list that we mostly covered this. So from energy, EPCs, GHG, but also stranding risk, which we also have somehow in the CSRD with the transition plans, but also physical risks, for example. There I want to step back out maybe a little bit here from the individual real estate perspective to macro. This is the slide on the left. I'm glad that you mentioned TCFD. I think it wasn't mentioned the first 2 days. So now we have IFSIS. But TCFD set this framework already so that we will have to manage physical risks on the one side and transition risks on the other side, and need to find the right balance there. So imagine we do nothing, no regulation, no push of the real estate sector towards more clean buildings. Emissions will remain high, and we will end in a disruptive world with more than 4-degree global warming, maybe. The other extreme is we do far too much of this with strict limits, like they will come now with the EPBD recast. So not being allowed to let buildings that don't meet a certain energy efficiency. Then we have these stranded assets. I need to invest money. Actually, stranded assets, very often confused term, doesn't mean it's worthless. You need to invest something or pay some penalties, like we have seen in New York, for example, already, or with the ETS now. This is also something that really makes a difference, since it is affecting the cash flows. Or I need to do a retrofit to get below this target curve. And the major theme of CREM was about assessing these risks, making them transparency, making them visible first at all, so that I can manage them. Potential costs in the future, cutting my cash flow that I might not have anticipated. So uncertainty, so risk, because I might not have anticipated that there will be minimum energy performance standards or minimum energy efficiency standards, how they are already in place in the UK. So where I need to pay a fine or need to improve my building. And now the question then is a little bit, where are we right now on this curve? Are we already doing enough? Is it enough regulation? And actually I tried to show here a little bit, I added to the original TCFD slide, the optimum. So where we really can minimize the total climate risk. Climate risk in terms of, we have the physical risks in terms of damages, loss of natural capital, or this stranding risk. And then we can move from this optimum to less ambitious regulation, resulting in higher physical risks, maybe less transition risks, or more strict regulation. Out of the optimum, more stranding risk, transition risk, so from the term transitioning to low carbon economy, but maybe less physical risk. So it's about finding this optimum somehow. I cannot tell you where we are right now. We had this presentation at the first day from Professor from Italy, originally Montera, I don't remember. She made this big model with how individual regions might suffer from physical impacts as well, and how the regulation should look like. So what we try to offer them is a tool that helps our customers there to assess these risks. And CREM is a part of this. For the physical risk, we use data from the Munich reinsurance company to make both kinds of risks visible. And in the end, it's then from the companies and portfolios perspective, of course, not only to find the right optimum between transition risk and physical risk, but they sum up together to the whole climate risk. And then portfolio theory tells us what to do. Find the efficiency frontier between risk and returns, which comes also then into the game. And of course, this climate risk is only one part out of many drivers of risk, of course. But we wanted to make that more transparent. And like the physical risk data from Munich Re, Swiss Re, or whoever, then for this transition risk, we developed this CREM framework, which was actually in the beginning, and it's also an example of public steering. It was based on a EU Horizon 2020 research grant, giving us some money, convincing them that that would make sense, with more and more companies pledging to do not take any actions that are against the Paris climate target, but they didn't know what that means. So we tried to make this really transparent and adding more KPIs in the end, but making it also a little bit simpler. Instead of multiple values from energy and whatever per square meter, CO2 per square meter. People starting to look at their EPCs. Now in the German EPCs there is CO2 already, but doesn't tell us if that's good or bad. The letter ratings, they are still based on the energy, and of course it's only a temporary snapshot, so this is now. That doesn't tell us where we need to be in 5, 10 or 25 years.
I wanted to actually get you there because there is one thing that we give evidence. Evidence is from yesterday. The thing is that we have to move to tomorrow. And to move to tomorrow, and I'm coming back to Gina and maybe to Ulrike as well, there are stakeholders in the game. There are people who need to move the things ahead. And I'm very interested in the audience to listen to who are the movers in here and who are lagging behind. And I'm thinking about the different actors that we see in the real estate. We're talking real estate or we're talking real assets. And whether we see that the capital is the one that usually chickens out and waits, or is it the large corporation, or is it the smaller corporations, or is it the technology adopters, meaning construction and technologies that are using there? Gina, you're talking to all of them because you're talking to construction companies, you're talking to investors, you're talking to bankers, you're talking to developers. Where do you see the biggest way forward and the biggest blockers? So the biggest enhancers and the biggest blockers?
I mean, I think that's a very good question because obviously, if you were to ask this question 2 years ago, it would have been very different as well because if you think about Europe in general, there are geographical differences as well in the mindset of the different stakeholders as well. I remember conversation, for example, let's say, if I think of valuers as well, in certain regions, they are saying, okay, let the market decide. And they are, of course, front runners towards more the western side of the region, where they are saying, we need to push ahead. It's usually the banks who are driving the ESG agenda, and then, of course, then regulation then comes into play, which then forces the hand of everybody involved. And 2 years after this, I would say now, if you were to ask the same question, it is different. I think everyone is aware that, it is inevitable. We all have to take action, and there is just no way around it. I mean, we are all part of the European Union. Regulation is a big factor at play. And whether you like it or not, you do have to comply. I mean, compliance is, of course, I think in the past 2 days, we hear a lot about compliance, about processes and everything. And I think it's you can't pinpoint one stakeholder group or one sector that is not taking this seriously. I think the ball game is on the roll, it's changing now, and we are on the right trajectory. Of course, there are people who may say that, okay, given current geopolitical situation, maybe we should wait and see. But then those who are concerned, who are thinking in the future, because future-proofing your asset is key, whether you're a developer, whether you're an asset owner, an investor, you are doing it. There's no question about it.
Yep. Thank you. Ulrike, we both work with UN agencies. I work with UNEC, you work with UN Global Compact. But you work with UN Global Compact network in one country, which means very practical. Unlike what I do, which is more policy making, more studies and research. I'd like to know from your standpoint in one country, and actually one country that we believe has a lot of sustainability the transfer from economy into finance made faster. Where do you see the rest of the region using your experiences, or where do you see yourself following other experiences in other regions? Where do we have to look at?
Thank you. That's a fantastic question. I think in general, and I break it down in international and Austria, in general, I would say business has always been the driver of sustainability. It was never the governments, it was never the NGOs, it was really business. And they understood why they're doing it because of the long-term value. Now there is coming one barrier in, no matter in which sector you are in, and that is the short-termism, basically thinking quarter by quarter. And if you have your primary target, and this is rightly to have for businesses, the profit and especially for listed organizations, the results-oriented reporting on a quarterly basis, you've got a barrier. Yeah, there's a barrier between the long-term and the short-term thinking. In Austria, I would say, luckily, we've got now what I would call, robust, for the time being, government in place. The big question mark there is, and by the way, not only in Austria, are the incentives being the right? Are we incentivizing the right measures? From the regulatory side, and this is where there's a huge shortfalling, I would say, right now, also with the budget that has been presented in Austria. You showed that slide, and I want to touch on that also in general, across sectors, is the leadership, and the questions that have been asked. And, while we can debate here for the next 3 days, and we'll be all agreeing that, this is an important topic, we need to be moving forward, it starts with the tone from the top. And I've seen that in real estate, I've seen this across sectors. If this is led from the top and understood by the boards and driven by the committees, the cross-functional committees, then you are fast. And by the way, adding to that, the strategy, ESG strategy, being embedded in the business strategy, like the CSRD is requesting it. This is so fundamentally important. If you don't have that, you lose that momentum. And that's another barrier and shortcoming that we need to make sure this is not happening with Omnibus and the CSRD debate. And one example maybe from Austria I can bring, an example that really has inspired me from the first day I saw it, and that is a development project. It's really pivoting urban living. It's called, you can look it up on the website, Baumhaus by Baumhaus. The owner is Dietmar Reindl. There are some pilots happening. The idea is to really tackling the challenges that you showed. CO2, so this is basically carbon neutral, or CO2 carbon neutral housing, combining affordability, touching the topic of soil sealing, and the idea is basically to put with wooden modules on commercial commercial stores, another layer for urban living, be it residential real estate, be it for students' homes or assisted living. And you touched on the licensing. So you can imagine how difficult it is in Austria to find when this has been, the license has already been adopted, and if you want to add another layer, you have to go back to that, and how tedious this is, how long it takes. So this is another barrier. Like even if someone wants to change things, it's not always that simple. And then obviously cross boards. I've also worked in heavy industry. Really being able to prepare that risk capital, because a lot of the technologies there are not financeable or scalable. And that's a risk for financial institutions, So I think there are a lot of things that need to be tackled. But just where does it take this? Where does this bring us? And I think to summarize it, we need to stay and keep the leadership. We need to monitor the reporting, ensure that we can actually navigate through that. And we need to become better. Europe needs to become better in proving the business case. The business case has to stick, and if we can sell the business case, then a transformation at the scale and speed that is provided can happen. Mm-hmm. Yeah, thank you.
It looks like we have done a good research on each other before, because I didn't know you were going to mention technologies, and my next question was going to be towards technology and innovation for Jens. I know you're monitoring what's going on to be able to embed it in your models. The question of technology being scalable, the question of having the data not only to show evidences but to use for the change is something that is very, let's say, hot in the industry. We want to embed the best so that we create the best units. But I wanted to know whether you see some good examples, some best practices on how to do this, or whether you have any ideas going forward on the whole scenario that you're looking at.
Yeah, before you ask towards Gina more, who are the front runners there and who are the laggards? And you mentioned short-termism and our experience now, but also when it came to extend the original EU commercial building project to residential and other markets, it was long-term investors. It was pension funds and the Norges Bank, which gave us some more money for CREM to extend this. And now I see it's investors like Zurich Insurance. So per definition, as insurance, their real estate asset managers are also thinking more long-term, trying to catch such risks. So, and this is not, this curve here, it's not a snapshot from just now. It's reflecting how this will look in the future. So future physical risk and future transition risk. The question is just, how does the curve exactly look like? Where is this optimum? And so on. But our customers, again, back to Zurich Insurance, for example, they are using such models already to incorporate this into their valuation, applying an internal carbon shadow price until 2100, I think, in their valuation models with an increasing carbon price that they apply to the emissions that they have in our platform. Or there's a lot happening with AI, simple things, not that simple maybe, before these large language models were created, like invoice extraction. That works fine if you have always the same, but if you have an international portfolio, like for Zurich, which is global, you cannot train for all kind of invoices, bills from each different energy provider, these models. So these LLM offer the possibility to do so-called prompt engineering. So just like with ChatGPT, but working into asking the right question. And you don't need to train all of the model again and again. It was already trained by the makers of the models. You just need to ask the right question, but of course also implement this small piece into a whole end-to-end solution, which makes it in the end easy for the property manager in Chile to upload the invoice from his electricity provider in Santiago and get this into the platform, so that in the end, Roger Baumann sitting in Zurich can do his sustainability reporting. Or others are also using this in the negotiations with their investors to demonstrate installing a PV panel on the roof for that Lidl or Aldi market extends this point where the building is below this CREM target curve by 12 years. So they can negotiate and convince the investors also to do more.
So integration, again, it's needed here. Now, we have very little time. I don't know if there's any question from the room before we come to last thoughts. Anybody? We're not interesting enough. Good, so last thoughts. Anything that you want to leave the audience with, any provocative?
I would say, I think one of the things we all need to take into consideration, hearing all these different technical insights and all these new updates to regulation and AI and all that as well, is the upskilling of current professionals and future professionals. Because when we're talking about, how do you manage your transition risks and how do you deal with all these different issues as well, but then some things are very new. How do we equip, people who have been working in the industry for a long time to make the right decisions, to further understand, even sometimes very basic one that I've spoken to people in the sector, trying to understand what is CREM, for example. Everyone knows what is CREM, but they may not necessarily know how to use it, for example. And then the question, of course, is for young professionals. Mm-hmm. Like because this is a long-term game, what can we do to educate the young professionals and to also make sure that they will continue these decarbonization pathways and strategy that we are embarking on?
Right. Education, everybody. Ulrike?
Yeah, education, definitely know-how, and it has always been extremely challenging for sustainability teams, but really now in that challenging environment to keep going. And perhaps my wish is really to let's make sure that Europe is not becoming the best practice example for reporting, but really in the spirit and the idea of the Green Deal, that, that we are leading the way in the transformation, ensuring that we can show competitiveness, which it is, marrying sustainability and business. We shouldn't actually be talking about that anymore, but that's I think is important and my vision and key takeaway. Let's move a bit away with the minds, hearts and minds with reporting and go and get things done again.
So practice.
I also tend maybe a little bit to underestimate really the importance of just reporting and disclosure, usually saying this doesn't make that big difference. If you have no clear limits or subsidies that really make that difference in the financing or the decision to do this or the more sustainable solution. But in the morning I heard the quote was something like, I talked with my bank and I cannot finance that building at all because it's brown. And and others confirmed, of course you can. So we asked, why do you think you can't, or why don't you want to do it? And the answer is, they seem to have ethical values and they have their KPIs, they said, and they come from the top. So again, focusing on what you said, it must be in the board and the people must be convinced.
So governance is a very important part.
Can I just add to
Yes.
answer this, because you touched, I think it's, there is with brown buildings, yes, they can be financed in the short term, but mid-long term, running through the scenarios that you've just seen and shown and shared with us, and banks are doing that as well, they might not end up where they ought to be ending up. And banks also have their books where they have to make sure, and transition plans they need to ensure that they can deliver on. This is a very
It's controversial.
delicate and controversial debate.
The question was a little bit also then, do we already see that green premium? And the answer was mostly no. You mentioned it's in the book and in the future, so actually valuation with a DCF, it should be there already. And what I wanted to add finally was, if it's just about these KPIs, I'm not sure. I'm a little bit afraid that this might not be stable enough. That's a bit fragile. Imagine the CEO changes because some president changes and the CEO wants to be in the favor of the president. So if it's not strictly in a regulation, then this can change very fast.
So I have a final thought, because you need to know the regulation and you need to know where you are, and you embed this in your business strategy, definitely. As your business strategy will harmonize and align with your sustainability strategy, the whole thing should get together. So my final thought is, again, integration. Put the two things together and you see how it works. Thank you, everybody. I see any last thoughts or talk? No, they don't want it, so thank you very much, everybody. Yeah.
Thank you. Thank you very much. Thank you. Working on that? No?
It does.
It does? Keep talking, apparently, then it starts working. Yeah. Well, now it works. Anyway, thank you very much for the previous sessions. I love that we managed to marry practice and also go a little bit higher level and talk about integration and kind of 360 view of real estate. Real estate is a very complicated topic. And if you think about it, next door you had the central bankers discussing macroprudential and borrower-based measures, etc. And the collateral is real estate. So if that becomes stranded or loses value, this is actually what's worrying supervisors the most. So a lot of our system is actually underpinned by real estate assets. So before we all head off happily to the sunshine and coffee break, there's actually a couple of people I want to thank very publicly. And the first one is the person who designs everything. Yesterday, those who were in the awards ceremony dinner already heard about this. So all of our websites, PowerPoints, logos, you name it, is designed by one person who's extremely talented. So Katarzyna, please, on stage. So we as a team got you a little something to thank you, and thank you very much for, she used to work with us, then she left for the US, but then she came back, so we're very grateful for that. Thank you. She's also coordinating all of the AV stuff, so whenever you send your presentation in the wrong format, she doesn't even ask you to redo it, she redesigns it, makes sure it's perfect, coordinates, and yeah, it's It's amazing. Anyone who organizes events, you know what a pain, presentations are. We all love slides. Now, the next person I want to thank very quickly is also Sarah Vivenzi. You heard from Sarah yesterday a little bit. So Sarah in the background is sorting the photos, coordinating absolutely everything, making sure that people don't get lost, get to the airport, come back, get all their social media needs, and so on and so forth. So thank you again. And yeah, you're free. Go grab coffee and come back. We will start on time. And the next presentation will be Paul Hebert from European Central Bank. They published a report this morning, so you'll have the option to literally be the first live audience to hear about this report and ask questions. Thank you.